Now we have a caller who's dialed in all the way from Qatar. Wilson has called in. How can we help you, Wilson?
Hello, good evening, ma'am. This is Wilson from Qatar, and good evening to sir as well.
Hi.
Good evening.
I'm a regular viewer of your show. Thank you very much, and compliments to you for bringing such a fantastic show with a lot of information. Normally, we don't get information anywhere else. That's the only reason why I'm calling as well. I do have two queries.
Okay. Tell us what's your question.
The first one being, because I do have, say, two properties at the moment.
Okay.
And the first one is not on loan, that was self-financed. And the second one is on loan, and now I'm planning to buy a third one on loan as well.
And all these are in India, Wilson?
No, I'm in Qatar only.
The properties?
Yeah, property. So I would like to know, since for the first loan, first apartment, I don't have loan. So how much of tax exemption can I get for my first loan, that is for the second apartment, and for the third loan, which is for, for the second loan, which is for the third apartment. So I would like to know how much of principal and how much of, interest tax exemption can I get for my first as well as second loan, which is for the second as well as for the third apartment. And I do have one more query.
Okay.
So I would like to know, am I eligible to keep one property for self-occupancy since I am not staying in India?
Okay. He doesn't live in India. Can
That's
he
right.
consider one property for self-occupancy? Also, he's plans to take another loan. What is the tax exemptions he can get over there?
Okay, so Wilson, we will address all your queries one by one. Number one, nobody can force you to give any property on rental. So which means you can keep not one but all three of your properties as your own properties where you can choose to come and live in whichever property you want, So technically speaking, you can have three self-occupied properties also, or properties, let's say, which are meant for your personal consumption, right? You can do that per se. Now, from a tax point of view, what happens is this, that if you have more than one property, then the income tax department says that you choose which of your property, and typically it's the property that we are normally going to live in. So that property becomes our self-occupied property, SOP for a short form. The other properties, now whether they are actually rented or not rented, all the remaining properties other than your primary self-occupied property will be known as deemed let out or actually let out. If they are really let out, then they are known as let out properties. If they are not let out, then they are known as deemed let out properties. Now, in all these scenarios, what happens is you get 1,50,000 rupees of exemption in your section 80C. That's on your principal repayment. So through your loans together, 1,50,000 is the outer limit. So that's what you need to understand for your principal repayment. Now, what happens is you're already going to have a self-occupied property, which is what you are specifying. So the other two properties will become deemed let out properties. And on these deemed let out or let out, whichever is the scenario, whatever interest you will earn, whichever interest you will pay on these two properties as a part of your home loans, that entire interest is exempted or deductible from your total income calculation. So which is to say that it's a huge advantage that you can have. So the second and third property, but then there is a little bit of a simple calculation which you need to understand. If these properties are actually not let out, then you will have to report in your income something which is called as a fair rent, and which is known as the rental value or the fair rent or the standard rent as it's popularly known. So that is the rental which you report as income, and against that you claim a deduction, and the deduction is the entire amount of interest paid. So effectively, in your books of accounts, it will become like a loss from house property, because obviously the interest will be much more than the rental that you're going to be showing or declaring. So that's how your treatment really works out. For your self-occupied property, 1,50,000, and interest up to 2 lakhs for the benefit of all other viewers. For properties that are your second and subsequent properties, again 1,50,000 in terms of principal exemption, and for your interest, any amount of interest is deductible from your income.
Right, Wilson, I hope we've answered all your questions over there.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.